Hello, everyone. Welcome. This is another live session, as you already know, as usual, on every important release that we are having from the economic calendar in general from the world. We're trying to brief you up with anything that we believe is necessary in order for you to be in line with the news, with what's going on in general in the market, and help you as much as we can. So, as you know, today we have the very, very important and well anticipated US inflation. It's something that the markets actually were waiting, we ourselves as well, waiting for the whole week, even since last week, I should state. And also, this is something that also the markets uh, awaited. We can see that clearly from the positioning of the markets this week. So, hello from Nigeria. Hello, everyone. Okay, Pastor, I can see that. Okay, so give me, guys. We started the live 30 minutes before the data for a reason, mainly because I would like to turn your attention a bit on what the numbers, on how the markets could react on the news, because the position already is looking that we have seen a weak dollar and a pretty strong equity market ahead of the inflation, because inflation, or at least the market, have positioned themselves for a strong inflation number. Okay, that's why, or it seems that that's why we have seen the dollar declining, and we have seen the stock market rallying, because a number today that shows a strong inflation figure, which literally will mean the postponement of the interest rate hikes for 2025, is something that is something that could strengthen dollar. So we might see a buying the dip, typically, basically, and we might see the global market, the global equity market, correcting downwards. So let's take it step by step, okay? So let's take it step by step. Let me share also my screen, okay? I have put the calendar on, and I have put the dollar on this side, okay? Because I would like to explain everything firstly, okay? So, my dear friends over here, I will come back to your questions in a bit, okay? So, today's inflation anyway is the most important, along with the NFP, the most important number coming from any country, and especially US, right? But this time, there are a few things that you need to have in mind. As you can see over here, let me double check that you can see my cursor. Yes, you can see my cursor. Perfect. So as you can see from my cursor over here, expectations are for let's say where is my monthly in line with the previous monthly reading. If we take the excluding food and serve and energy monthly reading, we are seeing a pullback, so it's a slowdown, okay, which is something that's theoretically could support the Fed easing scenario. And this could mean actually the headline actually slightly lower at 3.4%. But guys, as you can see from the markets over here, this is the dollar in 1 hour chart, right? It keeps pushing it lower and lower and lower. So what happens, okay? The market over here is positioned for a lower, as you can see, inflation in the monthly reading, 0.3% from 0.4%. Okay. However, guys, it would just if we just turn to the headline, okay, where's the basically? Let me just retail sales. Here it is. If we turn our eyes to the headline, we can see that there is a bit of a slowdown indeed from 3.5% to 3.4. However, guys, the number is still strong. Okay, so even though we might see the number coming either in line with expectations, okay, either unchanged from last month, do not be mistaken. Okay, do not be mistaken, because even though inflation is expected to slow a bit, okay, and that may not be actually, this is indeed, it is actually a dollar bearish. However, an inline reading or even a higher reading could turn the dollar to the upside. And basically, after the PPI number, after the NFP, after all the important events that we have seen this month, these numbers over here don't really make sense, because PPI, claims, NFP, GDP, so far they are suggesting a boost and a growth of the inflation rather than a slowdown, like the calendar and the expectations have forecast. Okay, so you need to be very, very, very careful this time, because firstly, obviously, a growth of the headline, if not the monthly reading, any growth of the headline or in line numbers with the expectations, it does not give a signal to the Fed that can proceed with a cut. Okay, so because why is that? Let me clarify a few things for you. Okay, remember that the forecasts, actually the target of the Fed, right, is around 2%. We are nowhere near that number. Nowhere near that number. Instead, last month we had a 3.8%, okay, 3.8% headline, which is nearly double of the forecast of the Fed. That's why even this tiny slowdown, you're with me so far. Ethereum, my dear friend, is a dollar cross, right? So hear me regarding what I explained regarding the dollar, and you're gonna get your answer. But also lately, crypto is like, not lately, the last 2 years nearly, is a bit reacting as a safe haven. So have this in mind. So guys, anything that I'm analyzed today, it has to do with the dollar, right? So even if you ask me about dollar ZAR, even if you ask me about pound, they are related. They are very, very strongly correlated. They are dollarized pairs. So here, very, very, careful what I am analyzed right now about the Fed, about the inflation in 20 minutes from now, and about the dollar, because this will affect all those assets that you are asking me about. So, as I was saying, even if we have, which would be a bit surprised, it got me at least out of surprise, even if we have a slowdown today, okay, or in line with expectations reading, the numbers are still very strong. Okay, the headline is expected to be at 3.6, so it's still very strong. It's closer to a 4% rather than the 2% target that the Fed is actually targeting. Okay, so that's actually pretty bad news for the economy if you think about it, but not bad news for the dollar, because even with this slowdown, okay, if the number still is strong, either in line or if we have a surprise as well, that was expected to be bullish for the dollar. Why is that? Because it will clearly get out of the way any June rate cut, and we will start seeing expectations for the very first cut to happen actually in 2025 rather than this year. Okay, so from the one hand, it could be um, it could be um, and in line with the forecast numbers today, or a bit of expectations today, it would be bullish. It's expected to be, actually, typically, theoretically, it could be bullish for the dollar, negative for the global stock market, but it will be a bad sign, unfortunately, for the Fed and for the economy as well. Okay, so is the whole story the last more than a year. Hot inflation, so be very, very careful, and considering all the data that we have seen so far, as I mentioned, it's unlikely to see inflation today easing for significantly, at least. Okay, so that's why I repeatedly stated that even if they come in line with expectations, still that suggests a strong inflation figure still, because it's nearly double of the target. Okay, so yeah, what else? You can see that the whole week we had a bearish dollar, um, um, exactly because the market is waiting for this important data. They have largely ignored the strong PPI number yesterday, the durables as well. So if everything that I have just covered, so in line with the forecast readings, or even a surprise to the upside, if this happen, have in mind that this what might happen is that we're gonna see the dollar regaining its beat. Okay, and we could see stocks reverting or even drifting to a sell-off. Okay, so, and you can see positively, possibly. So this is the dollar. Let me put the 4-hour chart just to see how much it depreciated this since last week and this week so far. So close to the mid of 104 area. This is where is the stocks. The stock have reversely appreciated significantly, uh, because we had also a significant spike into the tech sector as well. But as I said, surprise today or in line with expectations figures could turn the stocks to the downside. And let's see a bit very, very briefly gold. Let me put the white chart, because I know that everyone likes white charts and not black one, even though I'm used to the black ones. But nonetheless, we could possibly see, we could possibly also see the gold regaining some of its losses back. Okay, so however, However, that would be in contrast with a strong dollar, but the uncertainty, you need to be very careful regarding to the sentiment of to the sentiment. So uh, we could see gold. Okay, as you can see, it stopped falling, right? It stopped falling. Is very in contrast with the weak dollar that we are seeing right now, right? It seems that elsewhere, it seems that there are some cash flows out of gold into the stocks, right? Where is it? Into the gold. And so here we go. No, that's the gold. Gold. Where is my? Here. So we have seen. Sorry, guys. Just let me just find it. Where is it? Because someone mentioned Ethereum, etc. So I would like to have at least Bitcoin or Ethereum over here as well, just to monitor it ahead of the release as well. So let's have Ethereum over here. Perfect. Okay. And let's also put on Bitcoin. Here we are. Perfect. So some of the cash flows out of gold, it seems that they have shift into Bitcoin, not so much into Ethereum in the near term at least. A very limited bounce, I will say, my dear friend. Ask about it. Ask about Ethereum. Oh, okay. Anip. So why you need to be extra careful today? Simply because you can see that the market correlation is a bit mixed up. What I mean, people don't know where to trade right now ahead of the data. So even with a weak dollar ahead of the data, we can see that regardless of the weak dollar, we can see that also gold has corrected to the downside. So which is not in line, right? Doesn't make sense. Even in the 1 hour chart, you can see that also there is a pause there is a pause in a sideways movement into the gold. This is happening, guys, because there is a lot of uncertainty. Okay, everyone is waiting for the data. Everyone might even has set up some pending orders and etc., but they are waiting for the data in order to trade the news. This is what impression I got over here by closely checking the very briefly the precious metal, the Nasdaq over here, Bitcoin over here rose this week and significantly so far today since the Asia session, but this rally paused just 2 hours ahead, 2 hours prior the data. So we have another 10 minutes to go. I'm not gonna bring the calendar on back over here. I'm gonna bring it on as soon as the data are out. So what else I wanted to mention? Okay, one more thing regarding the market's positioning, okay, that I wanted to share with you. It is important to realize, so let me get back to the dollar, okay. It is important to realize the positioning now, okay. So as you can see, let's actually move to the dollar yen for a bit. As you can see over here, this is the daily chart, okay? Be very careful. This is the daily chart in dollar yen. Hopefully you can see it. Yeah, daily chart. We had a nice decisive 1, 2, 3, 4, 5, 6, 7 days rally, but so far today it pulled back nearly 3 days, nearly 4 days performance actually. So you can see that we had we have seen the markets positioning for a bullish dollars, but today, which is actually the big news, we are seeing that they are turning their there is a shift to the yen. So yen is gaining traction against the dollar ahead of the data, and this might be a technique to push the dollar lower in order to buy cheaper, but we cannot really tell as soon as we see a confirmation from the actual price action, right? So this is the 1 hour chart. So we need to actually see the asset. Let me just put some lines on. So these huge dip started nearly here, and the longest tail that we had was over here at 155.30. So we need to see the asset rebounding, right? Currently is already at 23.6%. So we need to see it breaking decisive 155.80 in order to at least suggest that it will get back to 156 level or even higher. Okay, so that's the dollar yen. What else? You can see we're another 7 minutes away from the data, so we have another 7 minutes to go. Let's turn our attention a bit on the euro dollar as well. I would like to go through very briefly the euro dollar as well, just to explain also the differentiation between the European Union, the Eurozone, the ECB, and the Fed. It's my euro. Here we are. I'm a bit blind. Here we are. 1 hour chart. Here we are. Perfect. So we have seen also a significant rebound on the euro dollar, right? Look at that. This is a daily chart. Even though overall, can you see that, guys? Overall is in a down channel. So let me just draw the down channel for you. Here we are. More appropriate one should be somewhere here. Yes, even though that's not the perfect one. Let me. Oops, wrong. Much better one. Much better one. Bam, 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 bam. So retesting right now the top of the down channel. But guys, have in mind that euro over here has rebounded, not necessarily because of the weak dollar, because if you think about it, it has rebounded for nearly a month, for more than a month now. Okay, so you need to have in mind the differentiation that we have between the ECB and the Fed. Usually the ECB follows the Fed, but this time that doesn't expect it to happen because the US economy is still showing significant strong numbers. So putting a barrier, an obstacle, a huge obstacle in front of the Fed not to ease its policy. While on the other hand, the ECB actually is ready to proceed with its soonish, at least, with its very first rate cut. Okay, so that is something that that it has and it will keep overall the euro weaker than the dollar. Okay, that's why we have seen this downtrend starting since the beginning of the year, because their forward steps, their forward actions have divergence. They are in a divergence right now. Okay, so yeah. Regardless of what happened today, um, such a divergence between the ECB and the Fed could keep the euro dollar overall to the downside. So we need to be this week very careful in regards to the euro dollar, especially as we move on to the end of the week, because guys, this might be once the market is calmer after the data and stabilize a bit, we might see the continuation of this downtrend. So that will literally mean the pullback backwards to 106 area, 105, and so on and so forth. Okay. Um. Okay. Okay. So 3 minutes to go. Let me check some. What pair is this? This is euro dollar. I'm sorry that you cannot see it. I thought it was visible enough. Maybe I could put back some of my captions. Yeah, this is what I'm gonna do. This is euro dollar daily. Okay. Come on, Andrea. Okay, save. Yeah. Where is the guys? For some reason, I think I have lost your comments. Can you put your comments again? My God, why this happened? For some reason I can no longer see your comments. Maybe I could check in my let me switch on the YouTube live. I think the most of you join us via the YouTube, so I might be able to see your comments over there. So give me a second. Okay. Gold. Yes, my dear friend. For gold, you need to be patient. It's better not to trade, to take any decision right now. As I can see, there is a negative momentum indeed. This is a 30-minute chart. Let me put that on as well. Try to update my captions so you can gold. That's 30 minutes. Okay. So you see, there is a correction lower, okay, a correction lower ahead of the data. There is a bit of a sign that the stochastic might revert, but we don't have any clear indication yet. So better to wait for the number to come out, and a bit of a up. Seems that the data are out, guys. Excuse me for a bit. Let me share quickly. Oh my God. Oh my God. Oh my God. Dollar got some. Let's get back to the dollar. Basically, let's start with the dollar, dear friends. This is gold. You can see that it spiked higher, but let me turn quickly my attention to the decline, huge decline that we are seeing right now in the dollar. Oh God, let me just bring the numbers out. I cannot. Okay, so huge drift over here for the dollar. What we have over here? Okay, lower monthly reading. Headlines in line with expectations, in line. Guys, that seems a bit weird, in my humble opinion. Because the reaction, the imminent reaction is quite logical. The imminent reaction is that indeed we have a slowdown in the inflation figure, a slowdown in the monthly reading in the headline, which suggests that, as a very first impression, is a dollar bearish. But I'm not quite convinced that this will last, because after all is just in line with expectations and not a significant slowdown. So there were definitely some pending orders triggered to the downside over here. Let me just zoom out a bit and let's check the volume as well. So everything came in line with expectations apparently. Okay. And it's the traction volume over here. Okay. But I'm not quite convinced that this will last because it's still a very strong number coming out. I'm not convinced that this is the case. So what we could see is just put the 15 minutes chart on. So dollar, actually, let's get back to the 1 hour just to check the previous. So the previous bottom back on the 2nd of May broke, bridge and broken. But the third support of the day, basically the 104 level, has not been triggered yet, has not been breached yet. So very, very important levels to be closely monitored, okay, is obviously the 104 level, right? The round number, a key psychological level for the dollar, okay? And the very next one is the 103.61. However, guys, okay, look at that. That's the very, very, very initial. Let me just, sorry for that, just to see also the retail sales, just to understand a bit whether this is just some pending orders being triggered and the enthusiasm, the enthusiasm that the U.S. inflation is out, or whether this is actually gonna continue. Because according to the data, in line with expectations, readings are not considered to be something good for the economy. Instead, they suggest that this is not enough evidence, let's say, to push the Fed to actually ease. So I'm wondering whether this is just a limited move to the downside, to be honest. 0.3% lower than expected, and everything else came in line. Retail sales, in line with expectation, decline, revised lower, and this is literally, and the monthly is literally zero. Jesus Christ. So basically, there is no improvement, there is no growth in the retail sales. Okay, obviously the attention is fully on the inflation rather than but yeah, this is this looks to be a bit of a limited move. So we need to wait a bit for the market to calm down a bit, unless if you're a scalper or someone that is trading in a very, very fast environment, such as a minute or even 15 minutes chart. Guys, look at that. Look at that. Look at that. This is the 1 minute chart. Okay, actually, let's go to the 5 minutes chart. 5 minutes chart. Look at that. It's struggling a bit. So look at this huge tail. Okay, huge tail, but quickly return back here, nearly in the mid of this candle, the last 5 minutes. So there is a lot of fight from the bulls over here. Exactly, this is what I was actually expecting, to be honest. That is what I said earlier. in line with expectations figure could be could take could keep sorry could bring dollar back into beat rather than adding pressure to it. But we need to wait a bit for the market to calm down, to stabilize a bit before considering any clear near-term momentum and outlook for the dollar. Indeed, on the announcement, it spiked lower, but as I said, the numbers are still strong. Is that enough to push the markets start pricing in a rate cut within the year, or it could do the vice versa scenario and actually start pressuring the markets to start pricing in a 2025 rate cut? Mm, mm. Let me check your comments, by the way. I know that for some of you that might be very confusing. There might be a lot of you that they like trading the news. If you are one of them, you should have already set your pending orders prior the release, right? In order to benefit on this volatility. But for anyone else that is a day trader, a price action trader, I don't know, a momentum trader, wait a bit for the market to calm down, digest the numbers, because you see, for the even already 8 minutes past the 8 minutes past the data, it seems that this was just the very first the very first let's say reaction, and not and looks to be a limited one. So I'm gonna return to the dollar in a bit. How long we should wait? Not for long. You see, it depends what kind of trader you are. Oil, are you? What kind of time frame you're actually trade? But let's assume that you're, I don't know, 30 minutes or 1 hour 1 hour trader. Wait for that for this candle that it was when the data had been announced. This candle to finish. Why? Because it's very important for us to see whether you see this huge tail, is it gonna come down and close closer to the low territory, or it will close higher, indicating, so if there is a small body and a big tail, it indicates that are not sellers in control but buyers are in control. Okay, so um depends on your time frame, depends on your strategy. I cannot really advise how long you should wait, but remember that the very first 10 minutes of the 5 to 10 minutes of a release are the most volatile of all. Okay, so similar to the NFP. Okay, so what else? Yeah, let's quickly shift to gold. Okay, very in line with the dollar weakness this time. Spike to the second resistance of the day. Let me see a bit the momentum. We have a bullish stochastic. Okay, RSI is above 50 and it's holding above 50 for a while actually. For you see, the last 2 days, so the last 2 days above 50. So there is some bullish bias over here, but you need to be careful over here to at least have a confirmed closure of this 30 minutes candle above the 50% level of this down leg. So up, so a closure at 2366 or 2366.30 or above it could suggest some recovery to the upside, or possibly a return back to the highs that we have seen so far today, which is just another $5-6 higher. So if I'm not mistaken, the high of the day was 23.75 somewhere here. Yeah, 23.74. Okay, but let me just check the 15 minutes chart. This is still here. Boom, boom. But we still have another 3 minutes, at least this 15 candle close. So now it's all about volatility and market noise. Try to avoid the market noise. People that are trading the news, okay, they have a different strategy. They are doing their homework beforehand. They are doing their homework before any economic data release. They are setting some pending orders. They have predetermined their target, their stop loss, etc. Uh, so yeah, so this is going for a lot of pending orders, but nonetheless, um 2 minutes to go, at least this until this candle closes. Let me see a bit the breakdown of this data, if I can find it anywhere. Let me check. Dun dun dun. Yeah, I'm not, by the way, just to clarify something, guys, the data were good. Not saying that they weren't good, but it's what I said earlier. It doesn't give the Fed a confirmation or the confidence, if you prefer, to cut rates. It is just, it will just pause any talks about hikes, which I don't think that's the case, but it clearly stating a problematic for sure inflation, a problematic, inflation, and it just, but it doesn't give the confirmation for a rate cut anytime soon. Okay, if we combine it with the weak retail sales that we have seen also today, um, um, it seems that there is a slight growth in a pretty soft economy. Okay, um, so gold remains to the upside. Let me just see. It already reverted. Okay, there was no confirmation being given. There is a lot of that candle already closed, my dear friend. Someone asked about the gold, and it closed well above. Actually, it recovered all the losses that we have seen the last 3 hours. It broken the previous high. So, my dear friend, since you are interested in, for many of you that they are interested in gold, it seems that there is basically okay, this candle has not over yet, but because there was a huge 15 minutes chart, let me check a bit what's going on over here. That's the one. Excuse me. So this is the daily chart. Okay, I have a reason and I put that on just to, so we have a double top over here. So it came back and breached already, sorry, Friday's peak. Okay, so basically further boost to the upside could turn the attention back to 24 area, 2400s, or even 24 30 area, 2430, which is the highs that we have seen, the record highs that we have seen basically. Sorry. But so momentum is positive, RSI is at 60 and slowly rising. Let me now turn back to the intraday setup just to see whether this is a sustainable move or not. 1 hour. Okay, 30 minutes. Huge bit. Yeah, we just have some kind of a confirmation, my dear friend Oli. Now we have finally a bullish cross on the stochastics over here. A bullish cross. So, uh, bullish cross. Stochastic keep rising. It keeps pointing to the upside. There is a bit of a correction over here for the RSI, but remains well above 50. Sorry. Yeah, it's as you already mentioned, bullish bias. It seems that bulls are in control of the gold. So, guys, have in mind that if the asset managed to close at that highs, so 2373, we could see a continuation. Okay, look at that, a continuation of this rally that we have seen for gold the whole week. Okay, so have this in mind that if the asset, we have just 10 minutes to go, but it seems that it's not really pulling back. It seems that bulls are in control intraday. So if it sustains its move to the highs that we have seen today, so if it sustains a move above 2370, then attention will pretty much turn to the next high resistance territory, which is basically 2400s. Okay, 2400s, make it round, or even higher, 2420, 2418 level. Okay, so bulls are in control. It seems just after it's the RSI holds above 50, few minutes to go, but already regain an extended higher, posting another new high for this week, and bridge already Friday's peak. So yeah, bullish bias it is. Bullish bias it is. Yes, a bit quiet chat indeed. Pound. Let me get back to the dollar basically. Now that I can see that there is a bit of a need, the dollar, the markets eased a bit. So let's see over here what happened. This is a huge dive, quickly turned higher, but is still below the second support of the day. That's not, sorry, that's the dollar, by the way. Okay, so we're still at months. We're still trading around months May's support level, May's bottom actually. Okay, so it hasn't managed to either confirm a breakout, either rebounded. So there is not a clear sign yet, because as you can see, if I zoom in and go to the 30 minutes chart, you can see that it's retested it and trying to return above it right now. So let's wait a bit. To see what will happen. Let me put my high Kenashi because they're very, very helpful as well. for the um, for dollar particularly. And let me get rid of, okay, yes, sell-off is still on. Bam, 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 bam. No tail at the top. Higher than the previous tail though. Flatten stochastic. Gonna keep Hikens for now. I'm gonna quickly turn back to the pound dollar, like Romanus, because Romanus asked for it. The pound remains in line with what is expected since the beginning of the week of the week and the day as well. We were expecting that we'll kick the 126.67 7 territory, and indeed that happened already. So the reason for that, it was this expanded upwards channel that has been seen. Look at that. That has been seen the whole week. Basically, I need to put it a bit better. Yeah. Connect the highs. Consolidate, and boom, extended higher. If I just put the 4-hour chart for you to see, you see, consolidated until it triggered. This triggered our attention. It was the break of the 126 level, extended 4 hours ago, and that's why anyway the pound has been to bullish side since earlier today, actually since the European Open. I think, no, I didn't put it on the Telegram, but for sure I put on the pound Swiss, if I'm not mistaken. So cable is positive, my dear friend. Romanus is positive. Um, overall, in the near term, it's positive. So we've seen a nice rebound, right? A nice rebound, and today it actually broken the previous tail. Can you see this? Sorry, the previous high back in the beginning of May. Latest up fractal broken. Okay, and considering the turn of the momentum to the upside, even though the signal line is still below zero, the RSI rising since the 23rd of April, stochastic keep pointing that there is further room to the upside. All these add to the expectations for a retest of 126.75 or even 127 level. Okay, this is for the cable. So overall positive, and in the medium term positive, intraday positive as well. Look at that. So this is a 30 minutes chart, by the way. Okay, consolidated, broken 126, consolidated a bit, broken the 126.33. Remember, this is the latest high that we have seen the last month and a half, so the whole April and up to date. That was the highest level. It was broken, extended above it, right? Extended above it, and um, and this breakout, the second breakout of the day, along with a bullish cross of the stochastic, with a rising momentum over here, and a rising RSI. Look at that, up. Slope of the RSI is sharp to the upside, indicating that there is further room to the upside. So attention now for the cable is to the very next resistance level, which are quite higher, and then 126.77 and the 127 level if this momentum, bullish momentum, has been it remains, let's say. uh shall we get back to the someone asked about the Ethereum. I don't know whether he's still on, but we have seen that, you see, on the announcement of the data and on the announcement of the data, we could see that the more cash flows went back to the cryptos. So Ethereum jumped, already breached the first resistance of the day. The second is quite far away, it's at 3,000 level, 3,003. Okay, momentum is still positive, so we confirm closure. Like if this candle closed quite strongly, like this one, um, at the first resistance or slightly above it, we could see indeed a continuation to the upside for the Ethereum. Let me turn back to the Bitcoin. Same, boom, 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 broken, extended higher, bullish cross from our stochastics, broken the previous high. So this, let me just, so this near term, this ascending triangle has broken. So that's very, very interesting, my dear friends. Very, very interesting. Okay. Ideally, I would like to wait for another 2 minutes just to wait for this candle to close. But look at that. This is a bullish cross of a bullish breakout of this ascending triangle. Okay. So if you measure right now the base of this channel, this could give you the next target levels if indeed the asset confirms, if indeed the asset stays above the triangle. Are you getting this? If we have a triangle breakout and we have a confirmation that the price will stay above the triangle and we have a clear direction to the upside, you can use the base of the triangle for identify your next resistance levels, target levels, and based obviously on your risk and reward ratio, in general the risk management that you follow. Okay, so let me zoom in further into the 30-minute candle. We have another minute to go until this candle close. We have an morning star formation over here, very, very clear in instant formation. Momentum keep rising to the upside. RSI up to above 70, but not looking ready to revert. So very nice. Extended above the 200 period moving average in the 4-hour chart, and it closed. Closed well above it. We might see some consolidation over here, or even a correction to the 63 400 territory, but momentum is bullish. So cryptos, my dear friend, are you still here? So if you're here, my dear Ethereum friend, um, the inflation figures seems that they have boosted further the cryptos, and we have a bullish bias, an increasing bullish bias in Bitcoin over here. Let me double check Ethereum as well, and that's the case as well. At least in the near term. That it seems that there is the bulls are in control. I hope these wars end for bears come back. I wish the wars to end for all the obvious reasons. Um, for all the obvious reasons, indeed. not only for the bears to come back, but all this madness to just end for the um, for the wider good. So let's turn back to the dollar. Let's get back to the dollar. Yeah, yeah. Okay, you can tell me, Andrea, is still bearish, and I will question you back and say, is it? Is it, or it shows some signs that it has steady, or the bearishness has paused a bit, or is sideways. I have Heiken ashes over here. Okay, they are not normal candlesticks, but the fact that I can see higher lows in my Heiken ashes, okay, higher lows, smaller candles, it triggers a bit it brings back my impression that that was the very first reaction from the market, okay, and that might be limited. So right now, let me get rid of the Haikenashi. Let me get back to the, come on. Let me get back to the candlesticks for dollar. Um, 30 minutes candle. Yeah. Let me measure also. Let me measure the candle. So it managed to close below the midline, below its middle level. I just measured this candle, right? The candle, the 30 minutes candle, during the announcement. So it closed below it. However, I'm getting some mixed signals over here from my momentum indicators. Okay. Indeed, RSI is overbought, but there is a slight improvement, and you cannot see the stochastic. Why you cannot see the stochastic? Stochastic is bullish, and this is driving my attention, and I raise the question marks whether this move is sustainable or not. So what you need to have in mind, guys, okay, have in mind in the near term, okay, in the near term, to consider that a closure of the in the next 30 minutes, a move and a closure of this candle below 104.38 could mean further pressure to the downside and a potentially a retest of 104 level. But if the asset continues sideways, unable to give an indication for a further decline, if it continues sideways, or at least, or returns with a confirmed candle, a candle needs to close above the 104.45 level. That means a move back to the 104.60 or even 70 level, which is the very first support of the day, converted into resistance. Okay, so this might be seen as a consolidation area. So you need to be prepared for any breakout, either to the upside or to the downside. To the upside, only with a confirmed closure of the 30 minutes candle, or 30 minutes above the 104.45, and to the downside, only with a confirmed closure below the 104.38. Right now, bears are trying to sell the dollar, but nothing has been confirmed yet. So very, very mixed signals. It means that literally gives the impressions that the markets don't know where to move from now onwards, basically. So, okay, theoretically, we have a slowdown, but not a significant enough. Not a significant enough. Yeah. So, guys, any questions? Any other questions? I don't see anything else coming over here. A very quiet chat indeed today, Ahmed. So, okay, as discussed earlier, pound continues to the upside. Remember our resistance levels, the ones that we have placed earlier, 126.75, 127. Let's check a bit the gold. Yeah, the candle is a bit impressive, recovered most of the last 3 hours. Losses is in an expanded channel, guys. That's positive. We have a near-term bullish bias confirmed by stochastic, by RSI, and by moving averages as well. The second resistance of the day already breached. So as I mentioned earlier, keep an eye because the gold might chase for a reversal back to the come on to the March and April's, basically April's highs. Bullish cross. Over here, let me check a bit what's going on. Yes, we might see a bit. Let me put my, just to check something. Not overbought, so that strengthens the scenario and the momentum that's in line with the momentum that indicates that there is still further room to the upside for gold. But it's still, we need to clear up everything with the dollar, even though they are not in line lately. So let me get a bit the news. Guys, I'm calling for last questions. If you are here, let me know what you want to, what you want me to cover. When there is anything that you don't understand, I will go through it again and again. So, so basically, what we are seeing right now is the markets firming up the rate cut bets for September and December. Because the inflation was in line with expectations, and we have a mist of retail sales. Don't forget that. But it doesn't mean that it will actually happen. This is not enough for the Fed. Okay, that doesn't change that we're gonna stay to interest rates higher for longer for June, July, August, even September. Okay, we have plenty of time ahead of us, but what we are seeing by what the market is pricing in is that for now, at least. But you can see that the risk sensitive assets have been the biggest beneficiaries, exactly because there is a total mess. So that's why cryptos benefited. So that's why we've seen Bitcoin and Ethereum benefited. Look at that. Boom. Gold recovered. Indeed, continues to the upside. That's the Heikenashi gold, by the way. Very, very nice. We had an inverse head and shoulders over here. Oh, my bad. Didn't notice it yesterday. Look at that. Inverse head and shoulders, neckline was over here, broken, so that could have give you a confirmation about the rally since yesterday night. I missed that. As yesterday afternoon. I missed that. Totally missed that. So yeah, gold benefited. This is a not high Kanashi chart as well. Bitcoin benefited. Stocks. We haven't seen stocks. They should have benefited actually. And yes, that's the Nasdaq. Boom to the upside. Okay, rising, returning back to 18,500. So that's back to 1 month highs. Rising moving averages, rising RSI. Momentum is still positive for stocks intraday and in the medium term. Nasdaq the same, decisive moves. So it seems that there is further room to the upside. Let me just the S&P over here already breached and broken March highs. So and actually basically we have a new record high. We have a new record high for S&P 500 over here, my dear friends. And that's a high Kanashi as well, but you can see that the fact that there is no tail at the bottom of this candle indicates that there is further room to the upside. Out of curiosity, I'm gonna try and measure it to see what are the next resistance levels. Next resistance levels 52.79, and I would like also halfway of this. So this should be. Sorry, it's my way of finding the mid of this area. Oh, yeah, clear. So 52.79, which is nearly there, but a break of that area. Okay, a break of that area. Sorry, here we are. Remember, they was already retested once. A break of it, a closure above it in an hourly candle could open the doors to 50 to 97, and the medium term level to be closely monitored will be 53.15, if and only if indeed it breaks to the upside and rejects this resistance level, and this resistance level turns into a support level. So, but we need to see to wait for confirmation. So yeah, risk sensitive assets have benefited significantly. So intraday stocks to the upside, cryptos to the upside, commodity currencies and commodities. So gold spiked. I guess Aussie, New Zealand should have spiked as well because they are commodity related assets. True. Boom. Broken the consolidation, it rose higher. Cable as well is a commodity asset after all, but also on the back of the Bank of England as well is something that gives that further boost to the cable. So yeah, that's pretty much it. If there are no questions, I'm gonna try and close this session, but let me see what's going on with the dollar still consolidating at the closure of this previous candle, 104.37. If I put the high Kanashi on though, again 30 minutes chart, still nothing really clear yet, but so be careful guys, okay? Look at that. I will show you an example. You can see, but Andrea, it keeps moving lower and there are very strong bearish candles. Yes, but this long tail of the previous one, it suggests that bulls are fighting for that floor, are fighting to defend that floor. you can see something similar happening over here. Huge tail, but the very next one was higher. And there is a consolidation over here, basically, okay? There is a lot of consolidation over here. The decline came well afterwards, basically. Yeah, it came here, basically. Consolidation. If your tails are not in line, there's no lower and lower tail, lower low, lower low, then that is the indication that the bulls are fighting to support the asset. Okay, similar to here. That's why more consolidation followed. Similar to here, you see, lower, 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 higher, higher. So be careful. This is not a sign of further decline yet. So guys, this is what I had to say. Yes, my dear friend. Okay, there is a bit of a correction for gold over here right now, but nothing really that confirms a reversal. Okay, this is a 50 minutes chart. Okay, let me see a bit. That's weird. Dun, dun, dun. The 15 minutes chart, the pause. Seems that there is a correction in gold. Not overall. It remains within the channel, and that's good news. But my dear friend Shiny, gold is already correcting. Be careful, okay? Be careful. NU, what is NU? I'm not good with the I'm not good with the abbreviation. What is NU? What is NU, my dear? More blessing. Anyone? Does anyone know what's NU? Oh, New Zealand dollar. Silly me. More blessing. Yeah. Okay. That's the New Zealand dollar. Okay, let's start with the daily, because it's at a very important resistance level. Okay, it's at a very very important resistance level, which used to be a resistance the whole April. Okay, we had a nice recovery. Momentum is rising. It has turned positive with the signal line, however, still at zero. RSI rising. I'm gonna get rid of that ATR. Okay, my dear friend. Okay, so there is a breakout of the consolidation that we have seen the last 2 weeks. There are rising moving averages, rising momentum. So overall, remains positive. So a closure tonight above the previous resistance, so above the 60, not 60, 80 level, could open the doors to a retest higher, 161, 161.50. Okay, so let me just measure it. 161 should be somewhere here. Have I placed it properly? Yeah. 161 or even higher. Okay, but only if we have a confirmed closure at that territory, at this resistance over here. So that's the very first thing. The second thing, um, okay, that's the law. So you see, ranging. This should have triggered your attention 12 hours ago, I'm afraid, that it broke under the resistance, extended higher, but still, even if we see a bit of a correction, still momentum is quite, it's actually significantly positive. There is a lot of bullish bias over here. Okay, so let me now turn back to the intraday setup. So, okay, let me get rid of some. Okay, what we have over here, you see that, let me just turn to the 1 hour chart just to show you why. Look at this momentum. Woohoo! So well above zero. So even if you're seeing a correction over here, all of my momentum indicators over here are supporting that this is just a correction and not a reversal of the so far uptrend this week. Okay? Okay? Look at the momentum. Look at the RSI. The RSI indeed is providing a bit of a pullback, but as long as it keeps posting higher lows and remains above the 50%, here we are, that's a bullish bias. Now, what I'm gonna do is also look at that, okay? This candle is huge. If the next 30 minutes candle remains above the mid of this candle, then still another indication of, and I haven't even measured the body. Should have measured the body basically. Here we are, in line with the with my momentum with the moving average. So as long as we don't see within the next few minutes a pullback below not 60-70, this is expected to be just a correction before another attempt to the upside. Okay, clear? Pound yen, the very no one asked about dollar yen, I'm afraid, right? You ask about and dollar yen. Okay, yes, it's my favorite asset lately. These are lines that I had in my previous analysis, already broken, already rejected them, broken, and the very next support, as I did my last analysis last week, it was that if something like that happened, then the doors might open for the 154 35 and 135.50. Okay, so okay, that's let me just clear a bit this mess. This is a daily chart. Okay, let's start with it. Cubano, you know that there are a lot of things going around yen. Japanese intervention, even though they haven't really announced it, but with their reports, their monthly reports, we have seen that there is so far a 3.5 trillion yen, if I'm not mistaken, somewhere there, I'm not quite sure, $2.6 billion. This is translated to $2.6 billion dollars of intervention. So even if they haven't expressed and stated clearly, they have tried to intervene. But this is not enough. This is not enough in order to see a dollar yen, the dollar yen drifting lower. Okay, in order to actually have an impact on the yen and actually to help the yen, it needs two things. It needs to be a coordinated move along with the other global markets, global central banks, and it needs to be combined with the policy. Okay, with the policy, either to hike again, or to get more aggressive with their bonds purchases and etc. Other than that, let's stick to the technical. We have a significant correction today, okay, but it doesn't mean anything if we don't see it closing below the 20-day moving average level, which is the 155 20 155 25, somewhere there, okay. If we don't see tonight closing below it, then it seems to be just a correction. As I said, rejected one, it put back down well below the highs, the 160 highs, below 157, below 156, and it's in the low territory 155, which if it continues to the downside, then it will open the doors. It could retest basically the 154.34 and even the previous fractal at 153.50. Obviously, if that breaks as well, that's in the long term, okay? You need to double check and to keep an eye on that territory as well. Previous resistance, significant support level, etc., etc. That's in the medium and the medium term, basically. Let's now see what's going on intraday. A significant sell-off, which is now oversold. So, my dear friend, this is looking that is trying to find to correct a bit. It's oversold. So we might see a bit of a reversal back to the third resistance of the day, the support of the day, or slightly higher because the asset has been oversold. So we might see a bit of a consolidation or even a move slightly higher before it extends further lower again. Now, however, here we are. If we have a significant bounce back to the 155.875, that could literally indicate actually that's way higher than it should. Okay, a reversal above 155.50, it could indicate the reversal to the upside and the potential retest of 156 up to 156.30 level. But as I said, for the time being, we don't have such an indication. It's an oversold asset. It's just trying to find a bit of a correction, a bit of a consolidation. Everything is pointing to a negative, to a bearish market with the need of a correction. Use your trend lines on your actual indicators as well. They're very, very helpful in order to identify a shift in the sentiment. Okay, look at that. Lower highs, lower highs, lower highs. So if it turns above my trend line, this means that, okay, the sentiment has changed from bearish, it's turning to bullish. We are nowhere nearby that. So a reversal is expected, a bit of a recovery. 155.50 is the next level, resistance level in the intraday. So it might come over here before it pulls back down again. Okay, keep monitoring the body of the candles, the resistance levels, your moving averages, your indicators, and etc., etc. So that's pretty much it. Oops. remains at the high territory overall. Okay, as I said, we need a confirmed closure today below the 20-day moving average in order to indicate that it could get back to the bottom or May's bottom. Now, pound yen, last but not least, because I'm running out of steam, to be honest, it should be in line with the sorry, with the strong um, basically over here. What we have, my dear friend, you ask Oli, what we have a strong dollar, a strong pound, but we have a strong yen as well. That's why you're seeing bouncing and fluctuating within a very within the 196 and 196.50 territory. So basically bounce between the pivot point and the first support of the day without a clear direction. Okay, so there is not a clear direction, as you can see right now. So let me get higher to the 4-hour chart to see if that is more helpful for a correct. Okay, it has been to the upside for 2 weeks now, right? 2 weeks now. There is a pullback over here, but RSI is well above 50, rising. So this pullback looks to be okay. Come on, yeah. RSI remains above 50. That was a bit of a pullback in the short term. That's why we have seen stochastic to the downside. This is the short term stochastic. Don't confuse yourself, okay? Use this stochastic that I'm using only for 1 hour or even 30 minutes chart, not for higher. So consolidation, nah, nothing really, my friend. We need to see a confirmed closure, not a tail, the body to close either below the first support of the day, the round 96 level, or above the pivot point of the asset, in order to suggest a return back to nearly 197 territory. For the time being, it's just fluctuating. It's in a range. It's in a range. It's in a ranking market. If you're a scalper, okay, I guess you can trade the range as well. If you're in a 5 or 15 minutes chart, and if you're basically using a strategy that allows you to trade the range, then feel free. However, there is no clear direction overall as soon as we don't see the asset exiting this range. This is a 5 minutes chart. For a few minutes, it seems that there is further room to the upside, but the 196, the pivot point, 196.56, is a very, very important resistance level. Okay, that's pretty much it, guys. I'm gonna call it a day. We're 1 hour and 30 minutes live. Okay, if there are no further questions, I'm gonna call it a day. Be very, very careful. By the way, gold already corrected, but it's sustained. This is gold. 15 minutes chart. You see, there is a pullback, but it's still holding above the first resistance of the day. Yeah. Overall, still expanding channel. Momentum is positive. RSI is positive. Okay. Nevertheless. Okay. That's. I'm glad that I can see that, Oli. Anything you need, we are both we are here to help. I mean, all the analysts, myself, Mihalis, Francois, Dennis, all the HFM analysts. So I'm gonna call it a day. Take care. Because there is still a lot of fluctuation, a lot of consolidation apparently. The markets are still digesting. This is dollar still digesting the numbers. Put your support and resistance levels in order to be able to spot any trigger points, okay? Do your homework, set some pending orders if you wish. Wait for confirmation before taking any decision and predetermine your target and stop loss levels. Never, never, never trade without a stop loss, okay? And a target, obviously. Have a great day ahead. Take care. And we're going to see you again soon. Thank you. Bye bye.